Today I'm going to talk about the Roth 401k. This is a really powerful retirement planning tool that can help you control your taxes if you pick the right investment choices and you know some of the rules of the Roth 401k. If this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner with Sickle Hunter Financial Advisors. The Roth 401k is over 2/3 of all retirement plans that have a 401k. So you're going to see these plans with a 401k. The Roth 401k goes in after tax, grows tax deferred, and comes out tax free. So all the growth you're not going to pay taxes on in retirement. So from a tax point of view, the Roth 401k works identically to the Roth IRA. Again, it goes in pre-tax, gross tax deferred, and then comes out tax free. Another way to look at it is you get your paycheck, you've already paid taxes on it, they've already been withheld, then you take that money and you put it into the Roth 401k, and then it grows tax deferred. Well, the Roth 401k will come out through payroll deductions. It works just like a Roth IRA, and the way it works, it's like you've already received that money in your paycheck. You've already withheld those taxes, and then that money goes into the Roth, and then gross tax deferred comes out tax free. And just like the 401k, we can put up to $18,500 into the Roth 401k, but you have to split that up. So it's an aggregate amount between the traditional 401k and the Roth 401k. So you can't put in $18,500 into both. You can only have an aggregate of $18,500. So if you put in $9,000 into your 401k, you could put up to $9,500 into your Roth 401k. Why? Because $9,000 plus $9,500 equals your maximum limit of $18,500. So the question is, should you put more money into your Roth 401k? Well, if you're in the same tax bracket today and in retirement, then it actually doesn't matter. And here's why. Using the Roth 401k to control your taxes, I've done this example before, and it's the identical to the traditional versus the Roth IRA. But let's take a quick look at what that looks like. So if we contribute $1 into the 401k, it goes in pre-tax. So that single dollar will then be invested. And let's say over time that $1 becomes $10, and you're in the 20% tax bracket. Well, that $10 then is $8 when you pull it out, because you pull out the 10, you pay taxes of 20%, that's $2, leaves you with the $8. Now let's say we put that same dollar into the Roth 401k. Well, it's gonna work just like the Roth IRA, so that goes in after tax. If you're in the 20% tax bracket, that means 80 cents would go into that Roth 401k. 20 cents is 20% of $1. So let's say this was in the same investment, so it increased 10 times over. That becomes $8. Well, you're not taxed on anything you pull out of the Roth 401k, so you're gonna get $8. As you can see, both of those are identical. Where this becomes powerful is when you're reducing your tax liability from an overall standpoint. So how does that work? So there are really two ways of figuring out how much to contribute into the Roth 401k. The first, you want to control your taxes. So the more money that you put into your traditional 401k today, it reduces your tax liability. On the other side, in retirement, that Roth IRA will help keep you in a lower tax bracket, because if you need more money, you pull it out of the Roth 401k, well, you get taxed on those dollars, but not on the Roth 401k dollars. So if you think about the tax situation right now in 2018, most tax brackets have been reduced, and some of the deductions have increased, such as the standard deduction. So if you think or know that your taxes are going to be lower this year, you might want to consider looking more at a Roth 401k. So the first way to figure out how much you should put into the Roth 401k versus a traditional 401k is taking a look at your taxable situation. If you're trying to get into a lower tax bracket, then putting more money into the traditional 401k will help that. But once you get yourself into that lower tax bracket, you might want to put those additional dollars in the Roth 401k for later on in retirement to help reduce your taxes then. And since tax brackets have been reduced in 2018, this might be a good opportunity to take a look at the Roth 401k. When taxes go up, you might want to consider leaning towards the traditional 401k. Again, each year could be a little bit different, so you want to look at everything in your taxable situation. So how do you figure out how much you should put into your Roth or traditional in advance? You have to look at your estimates. Where can you find these? You can look at the W-4. If you use things like the W-4 calculator at the IRS website, I'll put the link at the bottom. I've done a ton of videos on the W-4 as well. If you use this tool, you can estimate how much your tax liability is going to be to give you a good idea of how much you should put into the Roth 401k versus the traditional 401k. The Roth 401k also has no income limits. So it doesn't matter how much you make. If you have a Roth 401k through your employer, then you can contribute to it. So this is why it's so powerful. Now, there are a ton of other strategies to get money into a Roth IRA if you don't have access to a Roth 401k. I've also done a ton of videos on that as well. I'll put those links at the bottom. Choosing which investment options to put into the Roth 401k and the traditional IRA can hugely impact your taxable situation. If your more aggressive investments are in your Roth 401k, then those investments won't be taxed when they come out. So if you have more growth in there, you're going to be better off. And if you have your more conservative assets into your traditional 401k, while those will grow less because they're more conservative over time, you might be better off splitting up your portfolio rather than looking at complete diversification or a complete strategy in each portfolio. So choosing the right amount into the Roth 401k can really impact your taxable situation today and your taxable situation in retirement, not to mention the amount of money that you can live on in retirement if you use the traditional and the Roth 401ks effectively. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.